that there is a standard operating procedure under which things are going to be noted for. Floater, that means one policy applicable to multiple installations across. You have insured your house or your property at a particular place, which means insurance is available only for there. Irrespective to the usage of property destroyed or damaged, this you have to pay an extra premium also. Good morning and welcome to the second session in Unit 2 in Practice of General Insurance, where we are going to talk about the various principles and various factors relating to the fire insurance coverage and its policies. Now, when we are talking about the fire insurance, we also need to understand that this is a contract of insurance against the loss of damage by accidental fire. So in the previous session, we actually tried to understand what is the fire insurance all about. With that, keeping in that mind, that record, let us also try to understand that this is a contractual insurance only trying to cover up in case of any emergencies and exigencies happening because of the fire factor. Now, the most important thing is that what are the sources under which a fire accident or an incident can happen? Now, that is very, very important for all of us to understand. Why? Because the standard fire and allied perils policy, known as the FFSP, covers the following factors. One, it covers about the fire, then it talks about lighting, it talks about explosion, implosion, aircraft damage, riot, strike, malicious damages, storm, cyclone, typhoon, tempest, hurricane, and all those kind of factors which are included. Now, for insurance, the one thing is that they always have a book or a record which will tell you about the standard policies or standard operating procedures. So let's say that when we talk about fire, the fire policy will have certain standards under which all these kind of insurances are going to be classified. So let's look at the classification. So when we talk about the fire, we happening from the lightning, from explosion or impulsion kind of acting, or from the aircraft damage, from a riot strike, anywhere they throw a fire thing on the property or on the house, or because of a cyclone storm, any kind of activity by which the fire spreads across to the other zone. So what we call this is as the standard fire and allied perils policy, which means it's a standardized process that we are talking about. So when we talk about the standardization altogether, we are trying to understand that this kind of peril, this kind of policy will actually start floating around, which will try to make you understand how things are working. So this is very, very important for all of us to even understand how the factors are working, because you might not just go ahead and say that fire lighting is being done or an explosion, impulsion kind of things is being taken care of. Why? Because when we talk about the aircraft damage, when we talk about the riot, when we talk about strike and malicious damages, these are certain things which are bound to happen, which are bound to take place. So I would always say that there is a standard operating procedure under which things are going to be noted for. Now, the next thing is that we are going to now talk about the impact damage, the subsidence, landslide, including rock slide. We are talking about bursting or overflowing of water tanks, missile testing operations, leakage from automatic sprinklers, bushfire, which means fire that is being spread from the bushes or from the fire breakout kind of a thing in terms of the forest. Now, what happens here is that we have to understand and assess the impact damage, subsidence or a landslide kind of a thing, which is also being included here, bursting or overflowing of the pipes, leakages, which is very much an important part here, because any time you might get this kind of incident happening across, which is also included, missile testing operation. So these are all firearms when you're talking about weapons or you're talking about the firearms and other facility, yes, that is also going to be included in this system. Why? Because there might be chances, there might be situation because of a firearm, because of a situation like a missile testing or some spark or some weapons or some rocket or missile coming and attacking you. All those kind of things can start leading into a fire emergency or an exigency situation. Now, leakage from an automatic sprinkler installations or some kind of chemical outburst, bushfire, because this is very, very common in Australia and places. Why? Because you might have heard about the wildfire that breaks out in the forest and in the open areas, where suddenly the forest, starts catching the fire because of a bushfire accident altogether. So that is also being included as a part of your fire policies. Now, we have a special kind of policy that we need to understand in detail, and this is called as the floater policy. Now, what do you mean by a floater policy? This policy is issued for the stocks stored in the warehouse, godowns at various places, but belonging to the policy holder. So it's very, very important to understand to whom does it belong to. It belongs to the policy holder. Now, what are the policy holder? Why it is very, very important here? The policy is issued for them because normally when you talk about an inventory kind of situation, when you talk about an inventory kind of an area altogether, it is quite but normal that there will be a fire breakout, there will be some sort of fire accident that is bound to happen altogether. So that is why we are very, very concerned about the warehouses, godowns at various places belonging to the policy holder. This is very, very important. Why this is important? Now, let's try to understand that when you are doing this kind of activity or incident altogether, you need to understand that inventories are subjected to most of the time fire accident. So this policy issued to the stocks and godowns when the inter-movement of godown stocks is very frequent and it is not possible to record at each and every interval altogether. So the stocks cannot be monitored. Now, when you look into ports, when you look into the logistics services business, there is a heavy movement of goods coming in and out altogether. Now, that movement cannot be measured or monitored day in and day out. That is not possible. Why? Because the traffic is too high, and this kind of movement is normally found in companies who are involved in high level of manufacturing, especially when you are talking about electronics or when you are talking about cement, when you are talking about garment. So there are so many factors where you will see that the movement of the goods is interchangeably on a higher level, on a higher limit altogether. So that's why we say that the movement of stocks is very frequent and it cannot be monitored. The next thing is that policy holder can take the policy for one sum insured, for one complete factor, which is floated over all the godowns. Now, this is an interesting factor that you might have to learn here. Why is this a floater policy altogether? When I use that word floater, that means one policy applicable to multiple installations across. That's why we call it as floater policy. It floats around for every other system altogether. It floats over the system. So what does the person, the insurer, do is that he takes out one single sum. That means he will say that for all the factors, I will take only one policy for a particular amount, understanding the value of goods that keep coming in and out of his godown. Now, that policy holds good for all other branches and all other godowns that are available in that city, in that particular area, which is included as a part of the business. So that is why we say that these are all the special policy. It's a floater-based policy. Now, the next thing is that the declaration policy type. This type of policy is very, very useful where frequent fluctuations in stock and stock values to avoid the underinsurance of the stock. Now, what happens is that this is a kind of policy that comes in where there is a fluctuation that happens. Normally, when you talk about metal stocks or metal business altogether, there is a heavy fluctuation in the market because of the movement of the metals. Now, you might have seen that suddenly the value of copper went up, suddenly the value of zinc went up, all the metals started going up, iron and steel started going up. After the COVID, again, when we started reopening the markets, there was a sudden surge in the metal market. Now, normally, when you look into the MCDEX composite, that is the multi-commodity, especially when we are trying to target upon the metal commodities altogether, there is always a fluctuation, including gold and silver, which are precious metals, of course. So what happens here is that the insurance company will play a very important role in terms of covering up all these metals or all the stock values which have a fluctuating role altogether. But how am I going to cover it? The coverage will come in such a way that the insurance of lower value, this is very, very important for all of us. The insurance will be of lower value and not higher value. So why do I go by lower value? I should have gone by the higher value, because I know the value of the goods is so high. Then why should I take a lower value altogether? In that stand, I would like to say that since the fluctuation is so high, the insurance company will not like to take up higher risk factors. So they go with the base level value, the minimum value of the stock. Now, based on a pre-agreed terms, the stock may be declared periodically, say monthly, and premium at the year end. So what we try to do is that the stock will be declared periodically, say monthly. We will say this much will be given to you. Premium at the year end will be worked out so that on an average, the stock value declared and the excess premium, if anything, will be refunded to the policy holder. So what holds really good here is that if there is going to be some sort of factors, some sort of emergencies or exigencies, we will try to understand this policy with a pre-agreed. That means there's always some terms and conditions which is already kept in place for you. Now, this will be declared periodically, say on a monthly basis, and the premium at the end of the year, that is the policy year, is worked out on the average stock value. So how much stock you are holding for that particular year, we will take the average value of that, and that will be declared. And if there is any excess premium, automatically it will be refunded back. So you don't have to worry that, sir, I have paid an excess of insurance. Will I get that money back? Definitely, yes, you will be refunded back on your insurance. That doesn't have to be worried at all. So this is how you will be able to see that there is a huge amount of difference. There's a huge amount of value in terms of the policyholders' factors, in terms of the declaration policy coming into picture. Now, for a declaration policy, the one more important thing that we need to understand is that you need to be clear enough in declaring the value of the stocks. You need to be clear enough in telling the people what exactly is the cost factor, how exactly are we looking in terms of the value of the stock, what levels you are maintaining, how much is your inventory standards, and based on all these factors only, we can probably go back and assess the insurance. It is not that it will be done overnight. Suppose you are going to change your terms and conditions, you are not going to give a corrective value altogether, a perfect value altogether, then it will be a trouble for the insurance. And tomorrow, if you are going to claim something outward, saying that, sir, this kind of problem happened, so I need an insurance value here, this will not be accepted. So that is why we always say that it is mandatory for all of us while taking the declaration policy to declare the goods correctly. Now, the next thing is that the floater declaration policy. Now, this is a new kind of policy which is a combination of above mentioned policy, stock lying at various locations and the value of the stock fluctuating. So now I am combining both the policies, so that's why I call it as a floater declaration policy. Now, floater is there, which means take one sum value, apply to all the places, plus the declaration because there is a fluctuation in the stock. So you have both of them coming together, floater plus declaration policy put together. So both of them together is a combination factor. This is typically applied to companies where they find that the movement of the stock is very high, plus the fluctuation of the goods is also going to be the value. The fluctuation of value of goods is also going to be very high. So these are all the special kind of policies which have been floated around. Followed by normal exclusion. So when I use the word exclusion, that means to say that they are excluded. They are not coming into picture at all. The fire insurance does not cover the following risk, which is known as general exclusion. Now you need to know these terms very, very clearly. Inclusion means included. Exclusion means they are not a part of the policy. Now what are not a part of the general standard fire policy? The first one. The first 5% of each claim subject to a minimum of 10,000 in respect to the loss arising out by the act of God perils such as lightning, the STFI, when we told the standard kind of thing, subsidence, landslide, rock slide are covered under the policy. The first 5% alone will not be coming into this picture. The next one is that the first 10,000 of each loss arising out of other perils in respect to which insured is indemnified by this policy. So the first 10,000 rupees of each loss arising out of other perils in respect in which the insurance is indemnified is also not being taken into account. Now, the excess shall apply per event insured. So it's per event. Not that one time it happened, so I'm going to claim for the entire lifetime. No, based on one event, based on one circumstances, on that particular incident, what happened. We are going to assess that situation and come back to you. We are not going to say that because of one incident I can claim for lifetime. Next thing, loss or destruction, damage caused by war and kindred perils. Let's understand this word again here very clearly. Kindred perils. What do you mean by the word kindred perils? That means which are instigated by the mankind. So war is something that will not happen by nature by itself. It would have been kindred between two nations. So automatically the insurance policy will also try to assess. Now, giving you a current example, few days back, there was a war that was, I wouldn't say it's a complete full-fledged war, but a complete destruction, a physical attack that went between the two nations, Israel and Palestine. So now what happens? The insurance companies will definitely look into those factors of the houses that are located in the strip of Gaza. Why? Because those are the places which are affected by the war factor. These are all kindred perils. So loss, destruction, any kind of attacks that are happening in that zone, in that territory are subjected to problems, followed by loss, destruction, damage directly, indirectly caused to the insurer property by a nuclear peril. Now that is also very, very important. Now nuclear is a matter of subject which is not commonly talked about. Sir, are we going to do a rocket launch every day, or are we going to launch a nuclear missile every day? Absolutely not. But then if there is going to be a damage because of this, let me take North Korea as an example here, because of some missile launch, because of some nuclear exercise which keeps on going on in that country, if there is going to be a damage to the property, of course, yes, that is also going to be covered under this policy. Now, loss, destruction or damage caused to the insured property by pollution or contamination is not going to come here. This is going to be a normal exclusion which is going to be taken off, because pollution and contamination is again not included. Now, the other factors, loss, destruction or damage due to any electrical or electronic machine apparatus, fixture or fitting arising from occasioned overrunning, excessive pressure, short circuiting, arcing. These kind of factors will not be included at all. So when I was talking about the factors called as your war friend, that is not included. Why? Because they are done by the human act. So anything which is wantedly done, which is instigated, something like this where it has been an instigated, which is a human error kind of a thing, then we are not going to cover it. These are all the exclusions that we are talking about. So loss of the earnings, or the loss by delay, loss by the market, by any other consequential or indirect loss, or damage by any kind of disruption whatsoever. Now these things will not be included. So what? Loss of earnings, for example, loss by the delay. Now these are certain things which are not related to the fire peril, because there is a loss in the business, there is a loss in terms because the market is not of good standard, the goods are not moving, there is a delay in the market, there is some logistics factor. All these kind of things will not be covered as a part and parcel of the fire insurance. So one has to be very, very careful when he is trying to study about it, when he is trying to understand about the exclusion philosophy. Why? Because when we take a policy, we believe that you are completely covered, and at whatever might be the reason, just claim an insurance on it. That is not possible. That will not be accepted. Though the advertisements, though the philosophy says that insurance stands by you always, insurance is always available, don't worry about it, you can just take the insurance, but you need to carefully go through the document, understand what is included and what is excluded. Now, moving further, earthquake, volcanic eruption are covered under the fire policy, but by paying additional premium. Now, earthquake and all these factors will not be given as a part of the general package. You have to pay an extra premium, then it gets included. Now, loss or damage due to terrorism, unless and until specifically covered. Terrorism is not a part of the fire policy. Suppose there is a terrorist attack. Let us take our own state of Jammu and Kashmir, where there has always been incidents reporting due to terror act. But then that is not be covered under the fire policy, because that has not been specifically mentioned. But yes, if your fire policy specifically mentions about terrorism is also included, then that can be an inclusion, or else this will not be taken into the normal circumstances. Loss or damage by the spoilage resulting from retardation or interruption, cessation of any process, operation caused by any perils. Now, this is something which is not again included in the fire. Because of some operation mistake, or because of some kind of business operation related, or because of some goods getting spoiled, or there is no proper coverage for that, this will not be included as a part of the system. So normally we will exclude those parts away from that. So that's why we say that the perils are not covered under this particular system. Another thing, loss by theft during after the occurrence of insured peril, except for that of riot, strike, malicious terrorism damage will not be. So in India, you need to be very, very careful. Because of a riot, strike or something, a fire caught on me, that I'm not going to include it at any point of time. Now, the loss damage to property insured if it is removed to any building or place other than where it is stated to be insured, except machinery and equipment temporarily removed for repairs, cleaning, renovation or other purpose, not exceeding a period of 60 days. This is also important. You have insured your house or your property at a particular place, which means insurance is available only for there. Suppose you remove your house, you move, you shift away or kind of things. For the new place, again, you have to reinsure yourself. You cannot take that old insurance. Only in the case of machinery, if example your machinery has gone for some service, your machinery has gone for some repairs, for some intermediate work altogether, then yes, it can be considered as one of the purpose altogether in terms of which can come back. So that should not exceed more than 60 days altogether. So that is why we call this as an important factor altogether. So this is very, very important for all of us in terms of understanding and in terms of taking it forward. Now, what are the add-on covers? When I use the word add-on covers, these are something which are given as a part of additional factor. Combustion by fire only. If there's going to be a combustion, there's going to be some sort of chemical activity. So combustion will also be included as a part of the fire insurance. Earthquake, fire and shock. Because of earthquake, some fire incident, some shock happens, that can also be given to you as a part of the add-on in terms of the fire insurance. Forest fire, as I was trying to tell you, because of forest fire, your land, your property gets affected. Yes, that can be covered as a part of your fire insurance. Impact damage due to insured's own vehicles, articles dropped on them. Yes, after when your insurance vehicle is also being taken into account, if any kind of damages that are happening to your transport, to your movement vehicle, yes, that also will be taken into account. Deterioration of stocks in cold storage premises due to the accidental power failure and all those kind of activities, you can take an additional coverage for that. So which means we mean to say here is that suppose there is going to be an accidental power failure, or there is going to be some sort of problem by which you see that the premises gets into some challenges. Now let's say that here they say that applicable only when the stock is covered. So only when the stock is covered and there is an accidental power failure, there is somewhere, some sort of short circuit that happens, you can take an add-on, you can take a coverage extra than the fire policy and say that yes, this is what is going to be the incident altogether. Followed by deterioration of stocks in cold storage premises due to change in temperature arising out of the loss or damage of the cold storage machinery. Now earlier we spoke about the stock, now we are going to speak about the machinery. So when I talk about the machinery, if the machinery has some kind of fault, because of that the cold storage factors, the products that were there got damaged, then we are going to apply some insurance to it. That is very, very important altogether. Now, architect's fees not more than the 3%, debris removal more than 1% in case of some kind of death, omission to insure additions, alterations, all these factors can be added upon as an exclusive factor. So all these things will be added upon in terms of saying that these are going to be the extra factors, these are going to be the extra coverage that you can avail apart from the normal fire insurance. Now, the other thing which we are talking about is the spoilage material damage cover, which is also included. Leakage and contamination cover, in case if there are any liquids or chemicals that are involved, even that can be taken into account. Temporary removal of stocks and clauses, which is always included, and loss of rent clause. Suppose you have lost the rent because of some business operation, an extra coverage can be given. Insurance of additional expenses of the rent and in terms of the alternate accommodation, that can also be taken. Startup expenses. Now if you want to start a new business, so because of that there is going to be some cost, there are going to be some external factors, insurance can be added to that also. Now, choosing the amount to be insured, this is the most valid factor that we have to work upon. Why? Because while the proposer is the best person to know about the intrinsic financial value of the property to be insured, here are some of the suggestions that you need to understand. To get the amount equal or almost equal to a loss after an accident, one has to choose either the following methods of indemnity. Let's look at what ways in which we can choose the correct insurance. One, the normal indemnity, which means the market value of the property can be chosen as the sum insured. Now, I know that this is the value of the property as on trend going in the market. So, I will just go ahead and take the market value of the property as the sum insured. So, no need to worry. Under this process, indemnification, depreciation will be deducted. The deduction part will happen. Expenses of the construction, reinstatement, places towards the usage of the property till the time of accident. So all the deduction in terms of your depreciation will be done, and you will be presented the insurance value, followed by reinstatement. When I use that word reinstatement, the one thing that should come up on your mind is new for old. So what I'm trying to tell you back is that I would like to replace a new factor instead of the old building itself. So if the company feels that yes, there is a possibility of replacement that comes well within your insurance cost, then you can go in for reinstating, rebuilding the new property itself instead of just going in for a money value altogether. So that's why we say, irrespective to the usage of property destroyed or damaged, this you have to pay an extra premium also. The cost of constructing the property itself will be given as a reinsured value back to you. Now, escalation clause, that is also a very important thing. In this clause, we provide automatic and gradual increase of sum insured as per the percentage of escalation chosen by the payment of addition. So as per the need, you have to pay an extra or an additional premium because you have chosen the escalation factor by giving up an extra amount. So that's how the insurance value will be counted. This will ensure that the sum insured is coping up with the inflation value of the property and the currency. So if you have bought a flat some years back, but now the value of the flat would have definitely changed because of the inflation, because of the economic growth. So if you just want to top up with some extra value, that value will be taken against the current stand altogether, and with that, the amount insured will be also taken into account. So in case if there's going to be some damage, some changes, all that will be taken into account altogether. Now the next one, points to think about is the perils that are covered, the exclusions, the add-on covers that we are talking about, proper description of the property which is mandatory, the related causes like the goods held in the trust clause factor, adequacy of the sum insured in order to avoid the insurance factor that we are talking about. So that is also very much important here. And then we are definitely going to talk about something like how the insurance factors in terms of these changes are going to be taken into account. With this, I come to the end of the session. I hope and believe that all the information that is provided will be of a great help and benefit to you. In the upcoming sessions, we shall discuss more about the fire insurance and the various activities involved in that. Until then, stay tuned, stay blessed, and stay enlightened forever. Thank you once again for joining me today on this wonderful session.